All right, so I took 12K to 53K in exactly about 2 weeks. And in this video, you're gonna kind of find out exactly how I did that. Now, when it comes to trading, when it comes to being in the environment, the most important thing is trading live. I know when it comes to trading live in the market, you're gonna undergo a series of emotions, and that's the game. You wanna be able to conquer your emotions so that way you have the most profitability in the markets. And in this video today, you're gonna figure out how exactly I took starting with 12K all the way to 53K in exactly 2 weeks. Now, the reason why you're here is the main bread and butter, the main thing that I use in order to make these profits, and that is market structure. When it comes to market structure is the main organization on how the markets move. With market structure, it's almost like a GPS. And with that GPS, you're able to navigate through the markets. You're able to understand everything that's gonna happen. You're able to understand the ups, the downs, everything before they happen, even when they're happening. So with market structure, it's super important because it's gonna tell you where you are in the markets and where you're going. You feel me? And we all need to have a sense of direction when it is to trading in these markets. Now, with an uptrending market consists of higher highs and higher lows. You don't have to remember it now, just take notes. It consists of higher highs and higher lows and highs and lows, right? In a downtrend, which is the next market condition, that consists of lower highs and lower lows and highs and lows. Notice that there's 4 positions for each one. Higher high, higher low, highs and lows. This is for an uptrend, and for a downtrend, lower high, lower lows, and highs and lows. Keep in mind, there's 4 for each. The third market condition is known as a ranging market. This is where the market ranges between highs and lows, which we'll go over some examples later in the video. But market structure is important because once you kind of see where you are within the market, you can enter and have the best possible risk to reward possible, right? And that's why we trade as traders. We want to have the best entry with the smallest amount of risk and the large amount of gains. And if you follow market structure exactly, you'll be able to, again, build your account smartly and using the right amount of risk. But at that point, let's just jump into the land of the charts so I can show you some examples. All right, so here we are. So we're gonna switch to the polyline tool. And now an uptrend, again, consists of higher highs and higher lows, right? So we can see we have an uptrend here, and this is traditionally how it's gonna look, right? Now, again, the peaks that the market makes, which is these points up here, these are your higher highs, and these down here are your higher lows. Higher highs, which are the peaks, higher lows, which are the bottom points. Notice that with the higher high, this higher high is higher than the previous. This higher high is gonna be higher than the previous. This higher high is gonna be higher than the previous. It's kind of like it makes a trend upwards. Same thing with higher lows. This higher low is gonna be higher than this higher low. This higher low is gonna be higher than this higher low, right? So it's very imperative that you kind of understand the direction. Again, this higher low is gonna be higher than this higher low. These higher lows are mainly where you wanna kind of enter at. So we're gonna drop one right here. We're gonna drop one right here. And we're gonna drop one right here. Now, traditionally, I like to mark these off with green so I know. And again, these down here, which are the higher lows. And then these right here, which are the higher highs. Higher highs, higher lows, right? Now, there is gonna be, this is the ideal trending market, right? This is the ideal trending market as far as for the perfect scenario. Now, you guys know it's not always gonna be perfect, hence why I said, you have highs and lows in the market. But before we jump into that, right, the main goal is that the area that you wanna buy at is these higher lows. The reason being is because this is where the market, this is the lowest point that an uptrend pulls back. And keep in mind, the whole goal is to be buying low and selling high. So when you're in an uptrend, your main job is to buy at these higher lows, right? These higher lows are gonna give you the best entry for the best possible risk to reward for a buying position in the market, so that way you can be as profitable when buying. So it's super imperative to buy here because you don't wanna buy up here because if you buy, you're gonna go into drawdown, obviously, and you're gonna lose money. But if you buy at these higher lows, it's the lowest it could be. You get what I'm saying? So keep in mind, we wanna keep it simplistic. Buy low, sell high. So at the higher lows, you can buy at, and at the higher highs, you can take profit at. You can exit your trades. So higher lows is, again, the areas that we do want to buy at. Again, this is the traditional the traditional experience. We'll kind of go over some more examples in the video to kind of show you guys what, again, a more complex or more detailed uptrend kind of looks like, right? Because that's the pretty picture, that's the perfect picture that you'd kind of always get, right? And again, these things are not always going to be perfect. Cool. So now, next one, that's an uptrend. Now we're going to kind of go over a downtrend. Now, a downtrend looks something along the lines of this. It's actually trending downwards. Now, keep in mind with a downtrend, it's actually reversed, right? So a downtrend consists of lower lows, which is the lowest point that a market goes to, and lower highs, right? Lower highs is kind of where you want to take advantage of the market at, because these are the highest points that the downtrend has went to, which you want to sell at. So in a downtrend, it's our goal to kind of sell at these lower high points, which we have the best, again, risk to reward. So if this is a lower high, this is a lower high, this is a lower high, this is a lower high. Notice that this lower high, this one's lower, but it's still higher than this one. This one's lower, but this one's higher. This one's lower, but this one's higher. Notice that it's trending downwards. And after every lower high, you get a lower low. This is the downtrend market. So we're gonna go ahead and label that so you guys know what it looks like. Again, lower high, lower low, lower low, lower high, lower low, lower high, and lower low. Now, again, traditionally in an uptrend, in a downtrend, keep in mind that it only consists of lower high, lower lows, and highs and lows. Later in the video, I'll show you a more detailed example of what that looks like. But again, lower highs is where you want to kind of be taking advantage of the markets, so that way you have the best possible risk to reward. And again, your goal is to be selling at these high points that this downtrend makes, so you have the best risk to reward possible. That's the goal at the end of the day, right? So, cool. Downtrend, fully detailed, fully explained. You guys are going to be great out here. Now, the next market condition, as I told you, this is where the market kind of is ranging. Now, not a lot of people consider it. Me, Druzy Banks, I do, because you need to know what to do when this market situation kind of comes up. These are where the highs and lows kind of come in and where the market kind of ranges. Now, essentially, the whole point of this is where the market's kind of moving equal. It's basically in a range, right? So it's moving between these highs and lows areas. And these highs and low areas kind of look something along the line of this, right? Where it's here, it's here, it's here, it's here, here, right? Notice that they're equal. It's in that range. And then same thing with these low points, right? Let's change the color. It's here, it's here, it's here. Right? These are all meant to be equal, right? In a range. Now, in this ranging market, keep in mind, the number one thing that you want to pay attention is to the peaks and the low points, right? Whenever a market is ranging, you want to sell when it's high and buy when it's low. So whenever the market is ranging and it consists of highs and lows and it's ranging, you want to do your best to mark off where your area of support is, so that way you can take advantage of buying. And then you want to take advantage of your area of resistance where you could sell at, right? So at your high points, right? These are all the areas that you want to look out for, because you can sell at these high points, right? And then at these low points, right? You can take advantage to do the same thing and buy as well, right? Because we want to buy when it's low. You want to kind of take advantage here on where the low points are and where the high points are in the market, so that way you know where to buy at and where to sell at. Now, the most important thing when understanding market structure is you're going to have these things at high point. You're going to have these highs and lows in uptrends and in downtrends. And there's a simple trick to help you understand when the market is ranging, where it's going to go. Let's kind of go over some examples, right? Let's go ahead and give a more detailed uptrend, so that way you guys can know how to read it. So obviously we have our higher highs, right? Let's just say the market went into this range. Then we went up, right? Then we kind of came down, and then we went up. This is like a realistic situation right here, right? This is as real as it's gonna get in these market conditions. Now, the very first thing what you wanna do is, right, you wanna kind of establish the trend using market structure, and you wanna figure out what trend you're in. Obviously here, we're in a uptrend situation, right, to where we're making higher highs and higher lows. So we kinda wanna pay attention to that, right? Higher highs, right? Now, keep in mind, before you enter a range, this is the number one way on how you identify that you're in a range. The very first position that you get, obviously, is going to be a form of structure as far as for a higher low or a lower high. Because of this example, we're in an uptrend, so this right here, this very first position that we get before the range, this is going to be our higher high, our higher low, right? Obviously, this right here is going to be our higher high, right? Cool. What we're gonna do is we're gonna mark this off here, and we're gonna mark this off here, right? Now, when you enter a range, the whole point of the market is to range to build momentum so that way a big move can happen. So the number one thing that you need to pay attention to that matters in an uptrend, I repeat, note time. The number one thing that matters in an uptrend that you want to pay attention to is the higher lows. The reason being is the higher lows maintain the uptrend. As soon as something happens to a higher low, more than likely you're going to change trends. So this is how you kind of understand the difference between major market structure and minor market structure. But that's a little bit more later in the video. We'll go into details on that later. But again, so the very first position, you want to make sure that when you enter a range, that very first position, it's not higher than your higher high. That's the whole point of it being a high. It's not higher than your higher high. It's lower. It's in the range. It's either lower or equal to. Now, what matters with these higher lows, right, is these higher lows, they have to either be the same, right? They can't be lower because if they're lower, you're changing structure. They have to be equal in some way, shape, or form. So all of these here are meant to be equal until we transition, right? So this next one right here, this is going to be this is just gonna be a low. This is just gonna be a high, right? Notice that whenever the market ranges, it ranges in between highs and lows. That's why highs and lows are both in an uptrend and in a downtrend. It's very vital that we, the traders, kind of are able to quickly identify this so we can understand we're in a ranging market, something's about to happen. We need to really make sure that we're being on point and on our P's and Q's so that way we know where we are within structure, or we know what the structure is about to show us, right? So these are just lows. Now, you could see right here that this one is higher, right? So this would actually be a higher low, right? We're a little bit higher. We're not equal to, we're a little bit higher. So now you can tell that the trend is about to continue because we maintained higher lows. This is very, very vital. All right, so we're gonna drop this right here. 9 times out of 10, when you get a higher low, you should get the wonderful thing called a higher high right after that. So now we're gonna continue, higher high, boom, clone this, higher low, very traditional. And obviously, again, the trend is always your friend. So trust in your analysis no matter what until you see what you need to see. And what I mean by that is just flow with the structure of the trend. Don't try to go against it. If you're in an uptrend, you should only be buying. You shouldn't be selling. You should just flow with the process, right? Let the process just happen. I know a lot of traders, they'll try to do their own thing and then, that's where it goes wrong. Now, notice that we made a lot of higher highs and higher lows within this governed area. So now we're gonna pop this. We're gonna pop this bad boy right here. And again, this is the number one thing to me that matters in an uptrend is these pullbacks, because essentially this is where you wanna enter at, right? You wanna enter at all these higher lows to take advantage of the move in its full entirety, right? These higher lows are gonna give you the best risk to reward, the best entry possible, and then boom. So if you notice here, right, this right here was the most recent higher low. Now, once you break past a higher low, you're gonna do something to what we call a break of structure. A break of structure is very intimate because notice that when you transition from an uptrend to a downtrend, what mainly matters in that is just knowing where you are within structure. If you know where you are within structure, you're kind of good to kind of navigate the markets. And to me, that's key, right? just navigating throughout the markets. It's why we're here. It's why we're watching the video. It's why we came to this video, to be able to navigate through the markets better, to make more profits, right? Essentially what I did when I was doing this account build was I bought at these higher lows. What it would do is during a certain session, I would get a higher low and I would enter, or maybe I would get a minor move that was in the higher low. We're gonna kind of go over all this detail. But the main thing right here is what we need to identify is what we call break of structure. This is important because once we break structure, we're no longer in an uptrend or in a downtrend. We're transitioning trends. Now, in this example that I have here, we are transitioning from an uptrend now to a downtrend. So now we're gonna go ahead and watch this and see how this goes, right? So notice that we printed past the previous higher low, which means that we're gonna immediately make a lower low, right? We're transitioning to a downtrend. The market told us, hey, we're ready to go down. Then, 9 times out of 10, you're gonna get a retest, which is this market structure retest right here, which is a pullback to confirm that, hey, we're in the downtrend. This pullback is where we actually make our first lower high, which you can actually enter for the sells, right? So now we're in a downtrend, making lower highs and lower lows, right? Notice that this one was kind of equal to this one. So this would just be a low. This would just be, so this would be a lower high, this would be a lower low, this would be a lower low, this would be just a high because it's equal to this one, right? And then even after that, we got a lower low, which is lower than this previous one. And then after that, we actually got a lower high. And then we still ended up getting a lower low. Keep in mind that all these little details are important as far as for structure goes, because again, if you don't know where you are, you're gonna get lost. And you keep on hearing me repeat that over and over and over. Like, it's important because sometimes people will be buying at these lower lows, not knowing that it's an uptrend or not knowing that it's a downtrend, and they'll fuck themselves because they're holding the move too long, because they're not really paying attention on where they are within structure, or they're not paying attention to the bigger picture, right? So now that we're in this short mini downtrend, again, we want to take the opportunity to sell. Even though it's a temporary sell, it's still selling because we entered the downtrend. The moment that we go ahead and reprint past this previous lower high, guess what? We're now back in the uptrend to continue going higher high, right? And immediately after a higher high, what comes next? A higher low. So again, these are all just examples as far as for the market and what it's going to kind of put you through, right? And again, you want to be able to just identify where the trend is going to change. This is important because you could be buying here and holding it long term and then instantly going to drawdown because you didn't close out, or you didn't have a stop loss set because you didn't know where you were within structure. So this is why it's super important to understand how structure works and when a trend changes from an uptrend to a downtrend, so that way you can take advantage properly in these markets. So now I'm gonna kind of show you some real life examples of minor structure and major structure. I feel like this is important because a lot of people, they see how I do it in the markets and they kind of get confused. So boom, right? As you can see, these are my live charts, and I have a drawing technique that I'm about to kind of show you guys on how to kind of do, so that way you can take advantage of these buys and these sells and opportunity in the markets. So let's kind of change my charts. All right, Kobe Bryant colors, baby. You can see here, I got all my details. So for this example, right, we're gonna kind of start on one of our analyzing time frames. We're gonna kind of start on an uptrend, and I'm gonna select the polyline tool. Just as I showed you market structure on the examples is the same way I do it here. So we're gonna start from this area right here. We're gonna swing, right? We're gonna come here, boom, this is one, right? Cool, came, boom. Then we came right here, then boom, then we came up, then we pulled back, then we came up, then we pulled back, then we came up, then we pulled back. And all I'm doing right now is I'm just drawing structure on how it looks to me. I'm gonna show y'all guys a little trick that you can use to kind of spot check your work when it comes to just drawing structure in general. It's gonna change your life. All right, we're gonna come up here. Boom, 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 boom. Now, all right, so here we have clear as day an uptrending market, right? All right, cool, uptrending market. Now, notice this, right? On this 1 hour time frame, this is the trend that I see. We're now gonna change it to the 30-minute, and now we're gonna leave these up, and now you're gonna see these little details, right? Like we have this detail right here. We have this detail right here. We got these details right here. There's gonna be little details that make the higher high, right? That make the higher low. Keep in mind, right? This is what you're gonna see on one time frame, right? You're gonna see the big move, kind of something like this. This is what you're gonna see on the lower time frames as you go down, right? Let me kind of draw it again. Let me stop right there, change it to white. All right, this is what you're gonna see on these lower time frames, right? You're gonna see the details, right? That make this uptrend when you go lower. This is the whole point of kind of understanding the time frame correlation, because on the higher time frame, right, you're not gonna obviously be able to see that we broke structure and went from a uptrend to a downtrend to make this higher low. But this is ideally why we want to kind of be able to look out and identify these areas, because if we're able to identify what's on the higher time frame, we understand the main structure. If you're able to kind of identify what's on the lower time frames, you're able to identify your entries for your higher time frame structure. This is super imperative because, again, on the bigger picture, we had this uptrend that went up smooth, and then on the lower time frame, we had the details. So of course, when you're in an uptrend, on the higher time frame, you're gonna have a big move. When you're on the lower time frame, of course, you're gonna break structure. You're gonna transition and do all these wonderful things because, again, you're changing from an uptrend to a downtrending market. So that's exactly what I'm gonna show you. We went from the 1 hour to the 30 minutes, and notice that we're gonna see all these little details. So what I personally like to do when this happens is I like to overlap my data and just make sure that I'm being on point on my P's and Q's, because I can see the main trend, but now all these little details I'm interested about, right? These little details are what's gonna kind of help you get the best risk to reward, but also knowing when to kind of enter the market. One powerful thing that you do wanna do when it is that you're trading market structure is understand candlestick analysis. So if you haven't understand candlestick analysis, I have a full video breakdown on what candlestick analysis is, how to read these candles, how to kind of tell what these candles are telling a story. And when you combine that with market structure, you're flawless. But let's jump back in it. So again, right here, we're gonna kind of jump back, pull back, jump back, pull back. Right now, I'm doing it in white, but if you give me a second, I'm gonna kind of change the color, so that way we can understand it. Let's change this to black. Oh man. All right, so give me 1 second here. Oh, look like I messed up a little bit. Let's delete that. Let me see, which one is this? Let's delete that, all right, cool. Let's do this one more time again. All right, cool. So in black, we're gonna come right here. This is the pullback, and then right here, right? This is the lowest point, then we made a little pullback right here. So this is like a minor move, right? Notice that we're equal to, so this is like where we ranged a little bit. I'll kind of get in there and show you an example even more. Same thing right here, we ranged again and then we dropped. So in that same move that gave us the cleanness of that higher time frame, notice that on this lower time frame, we kind of ranged. So let me kind of get in there so you can see what this ranging market kind of looks like in a sense, right? So notice that right here, we have boom, we pulled back, we literally made the same thing right here, right? Notice the same thing right here. Then we broke, then we ranged again, right? Whenever you range, and I'll kind of draw it right here, whenever you range, price is gonna be stuck within this parameter, right? I'll show you how to kind of do these zones a little bit later, but it's gonna really kind of help you isolate price and kind of show you when you're in a ranging market properly, and when you combine this with market structure, you're flawless, right? So now pay attention. The last market structure area was, we have a little pump right here that if I could even go lower to like the 20 minute, you'd probably be able to see it a little bit more better. Let's go down to the 15. Cool, right there. I could already see it right there. This little hump right here was the pullback. So now check this out, we're gonna delete this again. We still have our higher time frame structure, right? Let's kind of make sure that's aligned, everything's aligned. Now this is the bigger picture. Now we're looking at the minor structure. Right, so we're gonna come right here, boom, pull back here, boom, we came right here, we came right here, we ranged, and we dropped, came back with the ranging markets again, just all the little details, right? And notice here that these lower highs that it's making, because you know, we're obviously in a downtrend, notice that these lower highs that we're making, they're rejecting here, but it was only one that took, And after we took right here, we started to reject and get lower and lower. Notice that we didn't make a new lower low as of yet, but these lower highs are getting lower, which means that we're maintaining the downtrend to go downwards, right? Cool. Then what happens? We push up and we retest, right? We broke structure. If you pay attention right here, right? We just went ahead and broke the previous market structure lower high, which is signifying that, hey, we're transitioning into an uptrend. Beware, switch your bias from sells to buys because now we're going up. This is a retest, right? This is a retest. This is a retest. And you'll notice the retest is because wherever you have a higher high at, it's more than likely gonna pull. Now, right here, it may look like we broke structure, but if keep in mind this time frame that we're on, we based our structure all off the hour. So if we go back up into the hour, would have saw that all these were just retests, right? All these were just market structure retests. We came all the way up, and this is our first market structure retest after we did this original break right here. So keep in mind, you don't want to stay on the lower time frames for too long. You only want to kind of use it when you're entering predominantly, and on the higher time frames here, boom. So the difference between the major is going to be done on the higher time frame. The minor structure is going to be done on the lower time frame, so that way you can get the best entries. The whole point of what you're doing on these lower time frames is to catch the minor structure, and when that transitions, you flip back to the higher time frame, and you should be ready to make a transition in structure. Simply, all you have to do is just break structure. Keep in mind, a break of structure will consist from a downtrend to an uptrend. You need to break a lower high, right? So then after that, you'll get your very first higher high, then higher low, and so on and so forth, right? From an uptrend to a downtrend, for example, which I can probably give one up here, right? Well, no, I can't because this is all major, right? I probably have to give one over here, right? Where we actually transitioned that over here. So let me kind of show you an example of a break of structure to the downside, right? So right around here, keep in mind we're on that 1 hour time frame, that good old friend, right? Notice here that where I started from, we're in a ranging market. Beautiful. What is the first thing that we do in a ranging market? We need to block off our highs and our low areas so that way we know where we are within trend. Boom, add a little zone there. Add a little zone there based on price action. And when we break out, we should be going to the upside. So notice here that we broke, boom, boom, higher low, boom. Now notice here that we printed low. We retested, making our first lower high, right? Then we came, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower. That's a low, boom, right? An aggressive lower high because we got this retest right here. So that means all of these were minors, right? Lower low, lower high, boom. These are all minor moves, right? Boom, boom, lower low, lower high. Lower low, lower high, boom, 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 boom. Now, keep in mind, what's gonna kind of always save you with a downtrend is that wherever you get your previous market structure lower low, that's where you should get your previous market structure lower high, right? Wherever you get your previous market structure lower low, you wanna make sure that this breaks so that way you continue trends. You can see here, based on these zones that I drew, I'm able to kind of critique the market and kind of see the area that our lower high should be kind of made at. And this is how you can tell from an uptrend to a downtrend. Keep in mind, right, the main thing is that we broke this previous market structure, higher low right here, signifying, right, when we came down just a bit lower, signifying that, hey, we are no longer in an uptrend or in a downtrend. Even if you wanted to wait for the one before that to get broken, we still broke and came back for a retest right around here. So you can see that the trend was clearly over and it went to a downtrend. And then somewhere down here, we broke and we went back to the upside, right? So again, being able to kind of identify your higher time frame structure as the major and being able to kind of go down to your lower time frame as the minor, you're really able to kind of get in there and see, again, the best risk to reward. Let's kind of show you one example of this in this downside market so that way you can see, right? So on this time frame, you can see it a little bit more clearly that, hey, we just came back down here and then we broke and then we came. Let's just say, okay, hey, we don't want to wait for that, right? Then, right, let me kind of get the tool out. Let's just say we start from here. Boom, let me change this to a different color. We'll change it to white. All right, cool. So then we came right here, then we came back. Then we came right here, then we came back. Now we're seeing all the details, right? All the details, right? We came back, we boom, we came back, we boom. We came back, we boom, we came back, we boom. Look how clean and sexy that looks on how you're able to kind of see the trend clearly, right? We came back and retested this area. Right here, it attempted to fake you out, but if you notice, we have this zone right here where our lower high is. We need to always break the previous lower high in order to transition up. It's always gonna be the previous, right? Let me kind of delete the ones that's in black so you can kind of see it. See, smooth. Let me add back the higher one. Boom, main trend, minor trend. Major trend, minor trend. It should add up. You should get the same thing, just the details, right? And essentially what we're doing here is we're back testing. So now let's kind of go back to my charts. So now that we're kind of done with the examples, I kind of want to show you guys how I was able to be profitable this week by just using market structure alone. Let's kind of go back to my chart so you can see these live examples. I'll show you the most recent buy that I actually took today, right? And this most recent buy was right around here. You can see here that on this higher time frame, I have my fib, right? Fibs is a little bit more advanced. This is my projection. I bought here because we were in a ranging market. Notice that in this ranging market where we were at, right? This is just one of the buys that I took from Sunday. So all these positions are from Sunday up until now. I'm a day trader, so I do trade relatively every day that I get a good opportunity, but I'm also patient for my opportunities as well. I wake up during the same time, the same flow, the same process to kind of get in and out of the market. So on Sunday, notice that we were ranging in this uptrend, right? This is Friday. Quickly soon we'll transition to Sunday, which right here is Sunday, right? So on Sunday, like around 6:30 when the market post open, I noticed that right here that we were in a ranging market, but that higher lows were being maintained. So what did you think I do? I took advantage of that. We retested, found an area of support, and then caught this wave up, which this move right here was for 60 something pips. After that, going into Monday, we dropped, right? My analysis though was that we were gonna drop because we made a higher high, we dropped, and boom, we came all the way down here, right? Now, if I go to the higher time frame, this 1 hour time frame, you can see where we dropped. This is our previous higher, this is our previous higher low, this is our previous higher high. We dropped into this area making a higher low. So what the heck did you think I did? I waited patiently and I waited for the trend, this downtrend to be over, right? And I started buying. I bought right around here because previously before this was our previous higher high, and this was our previous higher high. So around here, I knew that at one of these higher high points, we had to come back for a retest, which essentially when you're in the uptrend, it looks something like this, right? Where we should come back right here at this previous higher high and retest, right? Come back up, something along the lines of this, retest at this previous higher high, and so on and so forth. The whole point is that price can retest at the previous higher high, so you know around there can be a potential buying range, right? Which is exactly what I did down here. I waited, boom, I bought, we came back down, making minor structure. I said, okay, this minor structure is gonna be broken eventually. We broke, and I knew we were good to go. Now, the full entirety of this move, I can't even lie to you, I didn't catch this whole thing because it's like about 200 and something pips if I'm not mistaken. Hold on. Yep, this is like 200. I really caught like around 70. And then after that, I took profit. I let the move do its thing because I'm a disciplined trader. I like to follow my trading plan. I'm always gonna follow my trading plan because it's rules and regulations. If you don't have a trading plan, I will have a video that you can refer to in the future to how to build a successful trading plan. But anyways, back to market structure. And this is simply me off of just market structure. Again, we made a higher low. I wasn't up during these times. No, I was up, I was enjoying my day. Boom, market closed, market open, boom. So this is actually yesterday, and boom, right? So then we came. Literally, all I did was I saw that we didn't make a new higher high as of yet, so I can see that based on my fib level, but I saw that we were ranging. So once I saw that we were ranging, I saw that higher lows were being maintained, right? Because this is our previous higher low, higher low, higher low, higher low. So that was maintaining, and then we got a retest right here to where it made sense. I then bought, and what do you think? I bought again, and boom, 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 boom. Higher lows being maintained. Then at this point in time, right, we started ranging, and then we broke, temporarily broke, right? We came right back here. If you look what I have right here, over here to this left-hand side, I have a previous higher high, right? Which I'll draw it like this, and I'll go back to this 1 hour time frame. You can see that this was our previous higher high and that we were creating a retest. This is the move that I actually caught today, right? This is the move that I caught today that actually made me go into the 53K mark. Pay attention. We came back down, right? Let me go to the super lowest time frame. I predominantly enter on the 1 minute time frame so I can have the best risk to reward. I saw us crashing down into this area of support. I had this zone and boom. Literally it was this candle right here. And this is why I say candlestick analysis is so important, right? Because pay attention to the trend changes, right? Right here, boom, we came down. Right here is where buyers took over and then boom, right? We engulfed right here and buyers took over. I took it off this buy candle, entered a little early, right? But then we pushed up because this right here was supposed to be our last lower high, right? If you guys know anything about lower highs, after you get a lower high, you're supposed to get another one to show that we're gonna go down. We broke above and retested, but by then I have already entered off of down here off this area of support, right? Because I already saw it coming. I already predicted the trend that we were gonna change based on me knowing where I am on a higher time frame. So the minor time frame didn't really pay me attention too much. Even right here, right, where we're maintaining, all I did was flip up to my higher time frame. Let's find where I was at. And I noticed that, hey, we're still in an uptrend. We're just exhausting and wicking out. Cool? That's all I noticed when we was in an uptrend. So I said, okay, this is just a retest. All this is a retest of the area that we broke and that I need to pay attention to the higher time frame data on where we are. We came, we pulled back, we came. And at this point in time, it was already 60 something pips, 70 something pips. I got out and good thing my exits are so lit because if you pay attention right here, this is again where we did this minor break at. And at this minor break, we have a zone. If you don't know how to draw zones, I'll show you. Zones are kind of the range that you want to trade within. I'll save that for another video. But boom, when you combine market structure with a bunch of other things as your foundation, you know where to enter and exit. And that's the whole point of this video. So again, these are the exact live examples that I did to kind of take this account all the way up here to 53K. So that's where I'm at right now. I started this account challenge. This is my second week and I started with 12K and now I'm at 53K. I did all of this just using structure along with other technicals, but structure is the main component you need. So it doesn't matter what anybody tells you. Market structure will never ever fail you. It will never fail you. If you do this right, I repeat, if you do this right, you will seal the deal when it comes to the markets and you will slay the markets. Again, you have to trust in your analysis. You have to believe in yourself before anybody else does. If you want to learn from me, or if you want to go ahead and understand my outlook on the markets and how I tackle these markets every day, or should I say mastermind, right? Because we're masterminding, where I go over some examples of the markets and everything of the such, and I teach everything live. Everything I do is live. I don't do none of that pre-recorded mumbo jumbo shit. Everything I do is live. Like right now, I'm teaching one right now and I'm doing it live. So with that being said, thank you so much for watching this video. This was market structure. Pay attention, believe in your analysis before anybody else does, and you too will be great. It's your boy Drizzy Banks, and I'm out.